How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for October 17, 2017. So here is my report that I posted in the community, and here is the data that was collected from the latest report showing the positions of the institutions right here. And so let's get right into the data. Okay, let's see what the institutions have been doing with their positions on gold, shall we? So what we can see is that the institutions increased their exposure from 279,000 to 284,000. So that's an increase in longs. But if you take a look here, they also increased their shorts, okay? And this data was collected just as they were pushing up on price, reacting off of the monthly demand zone here, okay? So they're increasing longs and they were increasing shorts. Why were they increasing shorts as they were increasing longs? Well, it could have been in preparation for this drop down here, okay? So as price moves up, they start adding longs. So if they add shorts as well, then when price gets down here, once they close off those shorts down here, they're essentially getting a better price on those long positions that they were adding as price was going higher. All right, that's what I believe is happening. I think we're going to see a push to the upside from here. If that doesn't happen, price could easily break down lower to this area here. This weekly demand zone, this legitimate weekly demand zone nested within the monthly demand zone. Actually, I want to check something right now. Where's my application? Where's my program? There it is. Here I go. Go. I want to check something out here. That was taken out by that one there. Okay. Yep. So it has confirmed something that I was thinking. Alright, so this wasn't the legitimate weekly demand zone. This is the legitimate weekly demand zone. So we could potentially get price to drop down here in confluence with the trend line here, and then the move to the upside. It's very possible considering what we're going to see with the other US cross pairs, okay? So, but you could see that long exposure still remains the strongest position here. Longs, 77%. But if you take a look at the coloration of the cells, they're getting a little bit less green. All right, that means maybe press on the brakes a little bit before going long. I personally have opened up long positions because my trading plan tells me I have to open up a long position there. So the trade setup was right, so I took the position. Okay, so let's take a look at oil and see what we see. In terms of oil, what do we see here? We see that longs increased from 685,000 to 701,000. Big jump there. But we also see that for the last 2 weeks, they have been increasing shorts. All right. Now, I've said this before in the past. If they're increasing one side, like on the long, and they increase shorts for, at least 1 week, then there's nothing to really see there because they do that all the time. But if we start to see a trend forming in terms of 2 weeks in a row increasing, right? We see 2 weeks now increasing, becoming aggressive, and this happened as we were moving up in price right here. Okay, price was moving up, longs increases, which is what we're expecting, but now they're increasing shorts for the second time. So they were increasing shorts here when price was dropping, and then they continued to increase shorts when price was rallying. All right, so let's think about this. This happened on Tuesday. They increasing shorts on Tuesday, so this increase here could be the last bit of this drop here. all right, because this rally includes up until Tuesday, right? So it could have been Sunday. So Tuesday, let's see, Tuesday the week prior. Let's take a look here. Where are you? Where are you? Where are you? There you go. Okay. Show. Let's go to our daily chart. Take a look at something here. So let me just bring up my I'm just going to put it off to the sides here so I can take a look at the data at the same time as taking a look at the charts. So October 17th is what we're looking for. October 17 down. So right down here. So price was consolidating and shorts were increasing. But then we got the drop down right into this area of daily demand. So that shorts increasing could have been just to get price down to this area. Okay? So it's not necessarily that they're hedging at this point. It's just it could simply be that they were pushing price down into demand so that they could fill in the demand and cause price to head back upwards. So excuse me. So yeah, so I said possible hedging, but it looks like looking deeper into the charts now, it looks like maybe they were just dropping price in to get a fill to continue price to the upside. So very likely that we see price continue to the upside in the next coming weeks. Okay. Let's take a look at the US dollar. US dollar longs remain cooled off. Shorts remain aggressive. They increased shorts by about 1,000. Actually less than that if you look at the data. The bias is still shorts. An increase in net positions from negative 3.6 to negative 4.7. So here's the deal here. If you look at the US dollar cross pairs, what we're seeing is that a lot of demand is being filled into the charts, and we're getting weekly bullish engulfings. I don't think we got it here, but when we look at the US CAD and the US Japanese yen, you'll see that we have some nice weekly bullish engulfings. All right, but remember, on the US dollar, we removed supply right here. So all that supply that caused price to break through some demand zones back here has now since been removed, right? So we have nothing to stop price between this area. Okay, so if price wants to get up here, it can easily get up here. It's up here where I think the institutions will start to fill in their supply again, and that will be right where this monthly 20 EMA is. Okay, so that's what I'm watching for. I do believe the US dollar is going to creep upwards. If it doesn't, I'd be pretty surprised, but I think that's what's going to happen here. All right, even though they're still holding a bearish bias, I think when price gets up here, I'm going to be watching their short positions, because I think we're going to watch their short positions increase from 33 up to the 40s and maybe even higher than that. Okay, but that's just speculation. We'll see what ends up happening. Aussie US dollar, what do we see here? We see that they've dropped their longs from 93,000 to 85,000, and they just slightly dropped their shorts. Okay, the net effect is long exposure drops 1 point, but still remains very aggressively long biased. All right, net positions drop from 69,000 to 61,000 to the positive side, and this all comes as price was rallying up. All right, we reacted to the monthly 20 EMA and rallied up, but now we're getting this push downwards. So if the US dollar does climb up the charts, it's very easy to see the Aussie drop down here, and this is exactly where we want to get in long. All right, This is exactly where I want to get in long. Last time the institutions were here, they filled in 14,000 long positions, and I believe that they still have more long to fill in down here. All right, nice uptrend here on the monthly chart, so definitely want to get in on this one. Nice confluence with this trend line as well. Lots of reasons to get in long here. So a nice drop down here is exactly what I would like to see. All right, let's get to the next one. US CAD. Now this is the one that when I was examining this is the one that gives me the most conviction that price is going to head higher. Okay, and here's the reason why. If you take a look at longs right now, okay, sure, they're cooled off, right? Because we know the institutions are holding a very heavy bias to the short side. All right, that's great. So long exposure is only 17%. Short exposure is 83%, so it climbed 1 point. Net positions are sitting at negative 75,000. But here's the deal: we're still sitting within a 3-month demand zone. All right, and now we got this very strong bullish engulfing pattern being created, and a very poorly formed non-2-to-1 weekly demand supply zone is being penetrated. And look at what we have here: weekly bullish engulf. Boom. Nothing to stop price from moving up here. There's nothing here. There's nothing here to stop price, except for that monthly 20 EMA, which is going to be coming in contact right about this area. Okay, so looking for price to get up to this area, and then probably when we get up here, we're going to see them increasing their shorts, and as we climb up, I think we're going to start to see longs being increased, because remember, this data comes when they were consolidating. All right, this push upwards will probably show us next week that they added some longs to their positions, and they'll probably be hedging their shorts up until they get here, and then once we get up here, they're going to add shorts, and then boom, head back down. That's just what I'm thinking, basing this off of looking at all the other charts and trying to find the confluence of where the turning point is going to be. So that's what I'm seeing here. Definitely wouldn't want to be short the US CAD right about now. US dollar Swiss. Now I think this was the chart that really set the motion for the rest of the markets, and I'll tell you why. Because when you take a look at gold and you take a look at the US dollar and you look at the euro, they all pretty much just change direction in the middle of nowhere. All right. The only thing that really makes any sense here as to why those markets reversed is if you look at the US Swiss franc, we hit a really nice area of monthly demand, and when we hit that area of monthly demand, boom, we headed up. All right, but take a look at what we're heading into right now. Look at what is just right above price, a monthly supply zone, and we're just about to hit that. So I believe that once price, look, and we're very close to hitting that. That's this area here, very close to hitting that. I believe once price gets up here, we're going to start to see momentum shift, and then boom, and that'll be when the US dollar hits. Let's see, what was it that the US dollar was going to hit? That's when the US dollar hits monthly 20 EMA, the Aussie hits weekly demand, the US CAD will hit monthly 20 EMA, and US Swiss franc hits the monthly supply. So you see the confluence here? It all makes sense. It all makes sense what's happening in the markets, right? So I think this chart is very, very telling. This chart, for the longest time, I haven't been seeing any positions. I haven't been seeing any setups, I should say, anything special to want to trade it. But today I realized that this chart is very special because it's really dictating what's happening with the other markets. Okay? So we've just proven that, hitting demand caused the other markets to shift. Let's watch this chart and see what happens when it hits monthly supply. Okay? Be a really good learning experience for all of us. Euro USD, what do we see here? We see that the longs have decreased, shorts slightly decreased. Very bullish bias still. A drop in 1 point in long exposure, so that's not a big deal. Net positions dropped from 98,000 to the positive to positive 90,000, so no big deal once again. I do see that weekly supply is in control, so a drop in price can easily happen to this area where last time price was here, they filled in 5,000 positions to the long side. So it's possible that that's going to happen. Also, again, monthly 20 EMA. All right. So let's go on to the pound. So the pound dropped some longs from 79,000 to 72,000. They increased shorts from 64 to 67. So why would you increase shorts while closing off longs, right? This happened as price was increasing or rallying from a weekly 20 EMA, but then we got another slight drop to the downside. This would be ideal. A drop here to this weekly area of demand, this would be ideal. Price gets down there, I'll take longs on this every single day. All right, all day. Net positions dropped from positive 15,000 to positive 5,000. So right now, although they are long biased, I'm waiting for either a drop into weekly demand or some really good long setups to take this one to the upside. So now we come to the US dollar Japanese yen. This chart is a total mess. It's been very difficult to read this one because it's just all over the place. But what I do see is another increase in longs and an increase in shorts. So potentially some hedging going on here, right? If you look at the other charts, we see that all the US pairs want to rally. We have a weekly bullish engulfing just created this week, so they all want to rally, and we have a trend line here, so price can hit this trend line as everything else hits the monthly 20 EMAs and their respective supply zones, and then I see a drop happening here, right? But right now they are very long biased, starting to increase shorts, but I'd like to see what's going to happen over the next couple weeks with these short positions. If they continue to add shorts and start to reduce longs, then that means they're profit taking on longs and starting to prepare for a move downwards. If not, then we'll have to wait and see what happens. Okay, right now long bias, the coloration of the cells are green, and net positions hold at 101,000 to the positive. Kiwi, what do we see here? We're dropping into a monthly demand zone that's very questionable. The reason why it's questionable is because of what it accomplished. You know, you have to really squint your eyes to see this happen, but technically it is a demand zone. So price is dropping into it right now, and we have this weekly area of demand nested within it. Also the confluence here with the trend line. So it's very possible that price hits here, momentum shifts, and then we see moves to the upside. Right now, coloration of the cells, they used to be kind of bluish. Now we're starting to see a little bit more greenish. So that's because there is a drop in longs, but a bigger drop in shorts. So a little bit more bullish, right? Net positions increase from positive 5.7 thousand to positive 6.9 thousand. So I think there's a very good chance we see, consolidation here before a move to the upside. But then again, we could even see this break lower, because if you look at the higher time frame charts, 3-month supply is in control, and we just tested it once, twice, and dropping. So it is possible that that happens. That's why I have open positions on the Aussie New Zealand, because I believe Aussie's going to build up in strength, and I believe the New Zealand Kiwi is going to be weaker. So that position's been doing really well for me so far. So that is pretty much it. If you take a look at my report, you'll also see that the volatility is going to be all from the Canadian dollar interest rate release on Wednesday and the euro rate release on Thursday. So we should see more movement in the markets this week than we have in the last 2 weeks. So yeah, that's it, guys. I'm totally prepared for next week. I hope you guys are going to take this information and help it to and use it to help you prepare for next week as well. And so until next week, enjoy your week.